Hey everyone, I'm Ken and this is Ari, and we are two of the co-founders of Fluid Markets. And today we're going to talk about the formation of Fluid Markets, how we came to be, talk through our experiences, our up and downs, and at the end of it, we'll have a big announcement for all of you.
You want to talk about how you came to approach me and you first talked to Ben?
Yeah, sure. So Ben and I were working one summer at Goldman Sachs in a group called Corporate Derivatives. And within corporate derivatives, you trade a lot of futures contracts, you trade a lot of forwards and swaps, things of that nature. And we were in a subgroup called Credit Solutions for a little bit, where you learn about securitizing all sorts of different things. And we realized at the time that you can really securitize anything, or you can turn any product into a financial product. Whether it's a security is a different point. But you can turn any product into a financial product. And at the same time, I was managing my own portfolio and realized that YouTube was growing like crazy, but Google was not. And so I wanted to invest in YouTube, but I couldn't because it was owned by Google. So I went to Ben, who's now our CTO. Ben basically came on board, and then he was like, okay, so who else did you tell about this? And at the time I had told no one about this. And so I said, I told Ari. And I had not yet told Ari, so I called up Ari.
Oh,
and then,
really?
Yeah.
I didn't even know that, okay. That's funny.
And then I called you up, told you the idea about building an investment platform where you can invest in part of a company, but not the whole. And so what were your thoughts?
I think at first I was like, okay, here's another idea from Kenny. And then I was like, okay, I don't have much going on. I just finished running a program in Hawaii and did that whole entrepreneurial thing. And then I was like, okay, sounds cool. I have a whole year of college. Might as well try it. Like the idea, resonated with me. And yeah, that's kind of how it started. I don't think I took it so seriously at first. I think I was like, okay, it sounds cool. I don't know who this Ben guy is. I haven't seen Kenny in 2.5 years since COVID. So it was like, okay, we'll get back.
2.5 years.
How long was it? 2 years?
Wow, that's crazy. No, it was a semester. You were in Hawaii for the semester.
I wasn't there before too.
Wow, that's crazy.
Yeah, this was spring, so a year and a half.
Wow.
And
so yeah, so then Ben, I remember on one of our calls was like, okay, so what are we doing next? And I was like I had planned to stay at Goldman for a few years. Then VCs will love us after we've been at Goldman for 2 years. We have that in our resume. I remember telling Ben in front of the famed 200 West office. And then he was like, so what are we doing next? And so I was like, let's have a call with Ari. So we all got in a call together. And what were your first impressions from that call?
I don't know if I remember the call so well. I think immediately our first step was let's build a pitch deck and raise money, just because of the environment back then. I mean, it was apparently so easy to raise money. For us, that was not the case, but
also I think it was a good excuse to not actually work on what we were needing to work on.
I don't think we had the faintest idea of what to work on even. I think we had an idea. I was like, how do we even do this? Is it even possible? What does it even mean? We just got way ahead of ourselves. Let's go raise millions of dollars. I was in the thick of recruiting for banking. I had super days lined up. And I was sort of focused on that. And then, I don't really remember that first call though. I think we did the pitch deck, if I'm not mistaken.
Yeah, I think we started working on the pitch deck. I remember that was the one with the iPhone icons. Yeah, we'll put some pictures of that up on the screen. But that was not our greatest pitch deck, but not bad for a first try for what at the time was it was cute, and it was a side project at the time. We had no idea that this was going to be our full-time jobs. We had no idea that we were going to go into Y Combinator, and so at the time it was more of a passion project, and that was kind of our first effort at putting something together. Just a little background about our team. What was it that you think made us such a strong team at the beginning?
Well, I think we needed that technical co-founder. So
yeah,
Ben was a natural fit. At this point, I didn't have any experience in securitization. I ended up at Barclays within their securitization group. That gave me some sort of experience. Just way back then, I think we were all just very hungry, very entrepreneurial.
Yeah, for sure. And we each had some prior entrepreneurial experience. So Ari, he's too humble to say this and to bring it up himself.
This is classic Hawaii.
But what did you have going on when you said you were in Hawaii? Talk about that a little bit. All right, so what were you doing when you said you were in Hawaii?
That's one time.
I'm going to leave one of these in there.
No.
So what were you doing when you said you were in Hawaii?
I was sitting at home in Boca. It was fall 2020. And I remember that we were so bored. I mean, we had the beaches and, we're not one to complain. We're very, very privileged. But it got boring. We weren't with friends. There was no social life. At this point, it's been 6-7 months since COVID really hit and we were sent back home. The lockdowns were easing up. The vaccines weren't out yet. Florida was pretty much back to normal. And We went to New York for a weekend, got to see a bunch of friends, and then that's kind of where it hit us. If we want to be with friends, other people want that too. But Florida and New York is probably not the best location to bring everyone together. There's so much going on. We needed a place that was never going to get tiring. So we decided to go to Hawaii. So we went to Hawaii, we got the hotels on board, and then we put up a website and advertised this program for college students to come and join us for 4.5 months and work or take classes from Hawaii. And because of the time difference, you could take classes in the morning and then do whatever you want during the day, hikes, trips, going to the beach, hanging out, seeing new things. So that was successful. We had over 50 students join us. And yeah, we had a blast. It was very tiring, but it was an amazing experience. And then yeah, came back for the summer.
Yeah, and so I'll fill in for Ben a little bit here because he's not here. But Ben also was super entrepreneurial. When he was at Duke, he actually ran a shipping and logistics company that moved students' belongings up and down the East Coast to and from Duke for the semester. And then myself, I had also ran a little business on the side in YU. And so together, we had all had a little bit of entrepreneurial experience. We'd collectively done 7 figures of revenue. And so we realized that we had this like starting gate where we could all trust each other that, okay, we can actually do something if we put our mind to it. And that's when I think we realized that if we took this a little bit more seriously, maybe we could actually get something done, but we were still in college. We were still treating it more like a side project. We met like once a week for an hour, if that, and we didn't really have much momentum until the end of the school year started approaching, and we started realizing that, listen, nothing's really gonna happen here if we don't take this more seriously. Ben was about to graduate and actually go on vacation for a month or 2 in Thailand with his friends, and so there wasn't really a whole lot holding this group together. We were about to start full-time jobs. These full-time jobs were serious positions, and so we needed something to keep the team together, and that first fire under ourselves was really what made us take this all seriously. And so do you want to talk a little bit about that kind of, now we call it a rut, but that period where we took things less seriously and why we kind of transitioned into taking it more seriously?
Yeah, I loved Barclays, great place. The thing that I would say though is, I mean, who wouldn't want to run their own company if you're able to? And if you think you have conviction in your idea and you have the backing to make it possible to, afford food and rent, then I think it's everyone's dream. I mean, I can't speak for everyone, but at least for myself and the team, I think this is sort of like a dream that we always wanted to go after, and the ability to do that was just something we couldn't pass up.
Yeah, and to add on to that, I think the dream is more than just running your own company. We have all done that before. I think the dream was doing something even more, and Ben likes to talk about this a lot, and maybe one day we'll get him on the show. But one thing that we all are really looking for is not just running another company. Thankfully, we've all been able to kind of run that first company, right? We have our like lemonade stand equivalents, but what we're looking for now is, okay, how far can we push ourselves? How big can we make this? And can we really build something that a ton of people want, that we're able to make into something that we can look back on after decades and be really proud of ourselves?
Into a massive company.
Yeah.
Is what you, yeah.
Yeah. So, okay, so college is coming to an end. We're deciding we want to do this more seriously. Now, I think it was around May in our last year of college that I decided, okay, I'm doing this full time. And I stopped the other business I was running at the time, went full speed ahead on Fluid. And it's funny, as soon as we started taking things more seriously, investors started taking us more seriously too. So we had actually started fundraising before we had started building a business. Big mistake. Don't do that. Yeah. Investors want you to have a business, or at least have a really good idea of what you're doing and a lot of progress towards it before you start fundraising. So we did that backwards.
Do you want to talk about
the struggle?
Our time fundraising before,
yeah, of course.
For everything?
It sucked.
Yeah.
We
and this was like prime 2021.
Peak of the froth.
Frothy.
ZERP environment.
Yeah, I mean, everyone was getting a ton of money. Companies that had no business raising anything were getting $10, $15 million.
Even GameStop was getting funded.
No, but seriously, I mean, crypto bubble, like top of the iceberg.
Mm-hmm. Before the AI companies stole our cash. I mean, everything.
Okay. Yeah, no, but I mean, we thought it would be very easy, and we got some meetings. So that's kind of where we were like, okay. And I remember we would get these meetings, and we didn't realize we had like 4 or 5 meetings to even get a check. We were so far, but we get off the first call, we'd be like, that went really well. Like, they're gonna give us a check.
We have a second call.
Should we take the check?
Do we like working with them enough to decide whether or not we want their money?
I mean, we were so naive and so ahead of ourselves. That was funny.
That was funny. So we decided that we need to take this more seriously. We had met with a bunch of investors. Everyone said no. We had some investors ghost us. We thought that meant they were like the worst people in the world. How dare an investor ghost a founder?
I still don't love it, but yeah.
I mean, okay, but it's a little more common.
Yeah.
I thought we were the only ones like, oh my gosh, did we offend them? Like, what did we do?
For those that don't know, investors will ghost you because they don't want to say no, and then, down the line, your next round, they love the idea, they love where you guys are going.
But the other side of that is that also means they don't give you honest feedback because they don't want to make it seem like they don't like you or like there was something off-putting in case maybe you end up doing well, they want a chance to get in later on.
So I would say that, and speaking to other YC founders, I think the best type of investor that passes on your round is one that would give you feedback and would be very open with you on where they think you guys are and where they think you guys should be. And they keep that dialogue open for the next round because founders do remember, who isn't the nicest investor and who ignores you. I mean, we've spoken about this. Like when we have like 3 or 4 calls, and it takes a lot for us to get on an hour call every single time, and they just ghost you. It's not the best feeling, and it's really not.
It sucks.
It's really not, and you tend to remember who that is. I'm not saying you wouldn't take money from them, and of course, like most of them are very nice. I mean, we've had calls where even the first call, they were so disinterested, looking at their phone, not even looking at us. Like it was crazy.
And that first call was a very warm connection. It was a coworker of mine from Goldman who put us in touch with this VC. It was another VC that's in our network. So I thought like, oh my gosh, warm intro, we're definitely getting a check. And it just does not work like that. Okay, so we started taking things a little more seriously and we got our first few angel checks. And that's when I realized, at least for myself, okay, I can actually do this full time. I'm not crazy for jumping the gun a little bit, but there was still you and Ben. So again, that summer you were working at Barclays. Ben was beginning full time at Goldman, and we had no idea what the future of the company was going to be. We kind of decided internally that we were going to all go full time once we got to 300K in funding with what we called a path to 500K. And none of us thought that was going to happen, except me. I think I was a little delusional. What did you think of that whole time period? I
just remember I ended my summer, and I was supposed to move back in I lived with my friends up in Washington Heights by YU. I was planning on living there again, and then you called me and said, let's move to the Upper West so we can live together. And I said, why not? I didn't really know where this was heading. I had no idea that we would end up full time. But I was like, okay, let's give it one shot. I have another year till full time. Let's see what happens. And I don't remember what my thought was. I think it was just, this probably won't go anywhere, but it's worth a shot because I still loved what we were building. It was just like, we don't even have a CTO anymore, or he's in limbo.
Because he's working full time at Goldman Sachs and isn't allowed to work on our stuff.
Yeah, I mean, we were looking at like no code options and the cheapest path to building this, at the time, retail-oriented product, but obviously we...
Yeah, and keep in mind, the way we were approaching this was absolutely the wrong way you should be doing this. We were approaching this by, let's raise money, then let's go full time, then let's build a product. Yeah. When it should be, going full time or building a product are kind of interchangeable, but they should be 1A and 1B, and then raising money should be number 2.
I'll push back on that a little bit. I think it's very difficult. I think a lot of people like to say, if you have conviction, you want to build something, you should go full time and make it happen. Mm-hmm. Realistically,
contact.
And I said this in our first YC interview. I don't fully understand how you can tell somebody who can't afford to go full time. And then a lot of jobs, especially in finance, won't let you work on the side. So you kind of have that, you have to pick.
But that's why a lot of people are embracing this like indie hacker, solopreneur type of movement where they work while they have their job for a little bit. And then once you realize it can take off, right, then you go full time. But some of the partners at YC all the time, they talk about how backup plans are really not ideal and how if you really want to make this work, you really have to go all in. But again, you're absolutely right. It's a very privileged position to be in where you can decide, do I want to work a traditional job or do I want to go without a salary for months, maybe years. I worked for over a year without a salary, right? So do you, obviously that's including the time where it was more of a side project, but it's a very privileged position to be in, of course.
Especially, I mean, you look at a lot of other founders, they're coming from big tech, FANG companies, quant firms. Like, they've made pretty decent money in the past, and they're able to bootstrap themselves until they're at a fundable position. Whereas if you're right out of college, given that we had a few semi-startups or whatever you want to call them, we were able to,
strap it.
Yeah, we were able to bootstrap it to an extent, but I think to go full time, it would have taken a lot of struggle.
Again, when we say very privileged, though, that's not because any of us come from like wealthy backgrounds. I don't think any of us came from wealthy backgrounds. It's more just the fact that we had these businesses before, and so I guess maybe one thing to consider is many people who are able to just go full time are people who either had a lucrative job before or people who are able to save some money because of another small business that they ran. And so again, that's why some people go to Google, for example, as a stepping stone to big tech. And people love saying, right, be careful that you don't get trapped there, but for some people it is necessary. Okay, so now we're taking it seriously. We raised a little money from angels. We've exhausted our entire personal network. Everyone's heard too much from us. And so now it comes down to actually building this. So I'm full-time, Ari was almost full-time, and Ben was still working at Goldman. And the job here was make as much progress as we can without our CTO so that we can convince him to stay on full time. And what that meant was raising more money. And we still were not doing this the right way. You still want to figure out that you're actually building something people want, and then you want to raise the money.
Yeah.
But what we were doing at the time was, I don't know if we explained it in depth here, but we were pitching this retail consumer app where individuals could trade on segments of publicly traded companies.
This is the app?
So this was the app. You could trade on segments of publicly traded companies. So like iPhone but not Apple, YouTube but not Google, LinkedIn but not Microsoft. And we realized eventually, we'll get into this later, that it's somewhat of a tar pit idea. In a sense, it's one of those ideas that sounds good, but isn't really. Because it turns out that if you're building a product for a segment of the people who care about the bigger company, you are by definition reducing your market size and limiting yourself to only the biggest companies, which have enough of these segments for people to actually care about. Yeah. And another problem was that we were targeting retail investors. I don't know how much you guys know about retail fintech customer acquisition costs, but they're through the roof. It can get up to north of $100 per customer for a customer that might only deposit $100 into their account in their entire lifetime. So it just didn't make sense to target retail. And so we decided that it would be prudent to make the transition to targeting hedge funds and other asset managers and traders, because these people would have bigger trades and presumably we'd be able to sell them on a Zoom call or in an in-person meeting instead of having to do a bunch of paid advertising. But we made a crucial mistake here, which was we hadn't spoken to any hedge funds before we decided to make the switch.
Yeah.
And so luckily we didn't sound so stupid, and we talked to enough hedge funds that gave us some semblance of
enough conviction
to move forward, that we kept on chugging along, working out the legal strategies, putting together the actual documentation for the legal offering that we were gonna have, actually building the product, and we get a weird text. So for those of you who know how the Y Combinator interview process works, anyone can apply, super easy. You just go online, we'll put the application link in the description down below. But anyone can apply for Y Combinator and then they get back to you. So the first time they got back to us, they rejected us. But they sent us an email that said that we were in the top 10% of applicants.
You think we were?
I think they're probably honest with that in retrospect, but at the time I thought maybe they just send this to everyone. And of course we were scouring through all the like startup Slack channels, seeing like, oh, have you heard back yet? Have you heard back yet? Oh, did you get this email? Did you get this email? It was like you were like, oh, did this girl like read my message?
Yeah.
And ultimately we didn't get in. We applied the next time. So again, that was when he didn't take anything very seriously. We didn't get in, but we were in the top 10% of applicants. So we're like, okay,
whatever
probably filled out the form well.
Yeah, whatever.
I don't know what it means. But then when we applied a second time, we got an interview. Oh, the interview.
Oh, well, we started sweating.
When you got that email about the interview, how did that make you feel?
I think I was like, I don't want to say it, but like, what the hell? I mean, we immediately started, like, we hopped on Zooms, we were going through a bunch of websites with interview tips and mock questions, and, what are they going to ask? It's only 10 minutes, are we going to be able to answer everything? well enough. And then we hopped on. And I think they have a really good way of asking you good questions, and then when you answer them what you think is well, they don't really show you what they think of your answer. So we were kind of like, did it go well? It was only 10 minutes. I think it went like 5 minutes over. So it was like 15 minutes. We're like, ooh, like that's probably a good sign. Like we looked up like, why is the interview going over? Like,
listen, I would imagine this is how people feel when they're in front of a jury and the jury can't react. But you're like, did I make a good case? I don't know.
I mean, it was like 5 p.m., 6 p.m., 7 p.m., 11 p.m.
And they usually respond pretty quickly.
Yeah. So the longer it goes, if you get in, you'll get a phone call. If you get rejected, you get an email. Unless in some cases, very few, they'll ask you for a second interview. So we didn't get an email. We didn't get a phone call at 12 or 1 a.m. I'm in bed at this point. Maybe it was even 2 a.m. At this point, we just like stopped checking. We're just like, okay, whatever happens. And then we get an email at 12 or at 2. What'd that email say?
Was that from No. Yeah.
And it says, we're not going to fund you. We like the idea. We have some concerns.
Well, keep in mind, that was after we sent them an email clarifying some things that were question marks during the interview, which we sent right away. They basically said, we still have questions about those things. And so Ari was like, you got to respond to this right away. Maybe they'll change their minds. YC is known for never changing their minds.
By the way, can we say this?
And I thought like, there's no way they never let people in. And so, we
were right. They didn't let us in.
And we were right. They didn't let us in.
Yeah.
So we thought I thought they were never going to let us in, and I was right. They didn't let us in. But we sent an email responding to their criticisms, and so by the time the third opportunity to apply came around,
we were just filling these out. Like, who knows if it'll happen? Probably not, but like whatever.
Like we were not seriously invested in it, except for the fact that it would have really been a great way to convince Ben to come on full time.
Yeah.
And
of course it would have been a great experience. We just didn't think it was. I don't know if we thought if it was in the realm of possibility. But when you get rejected twice, it sucks.
It's defeating.
Yeah.
So when the third time to apply came around, what did you tell me?
We weren't going to apply again.
Third time was not the charm.
Ben was still at Goldman. Kenny and I were still trying to figure things out. We still had this strong conviction. We loved what we were building, but we didn't know if we were fundable at that point. And we get an email from who says, hey, if you guys are still working on this, I want you to apply again. We were like, does this even happen? Like, we should definitely apply. Kenny didn't want us to apply at this point.
I was like, listen, we had finally been learning that you should work before you fundraise. And I thought there was no reason they were going to change their minds, but I think what they really wanted to see was just that there was conviction and consistency and some level of improvement, and they just wanted to see that the level of improvement improved every time.
Yeah, with enough convincing, we applied, and we got an interview. We applied late, by the way. We got an interview, I think, the next week or that week. We interviewed. We thought it went okay. We didn't. I don't know if we thought it went amazing.
Yeah, I thought it went worse than the first one.
I mean, yeah, there was a lot of pushback, but we showed a lot of conviction in our answers, and then I think like 2 hours later, maybe even less,
I got a call. And on this call, I'm like, Ari, guess who it is?
I think we have the recording of the call. We can put it up for a second.
No, we don't.
I have one. Yeah, I do. And then we got in.
Yeah, so that night, we all met up. We met up with Ben. He said he'll think about quitting his job and leaving Goldman.
It was a little more like, I'm going to quit.
Yeah, but he was careful not to be definitive.
Yeah.
But then we all start walking, and I'm like, so here I'm about to get engaged, and I'm like, no way am I moving to San Francisco. My girlfriend will hate it. There's no way she'll be okay with it. I'm not gonna get married. It's gonna be the end of my world. And by the way, all our customers and all our friends are in New York. We had just moved to a new community both of us had just moved to a new community with all our friends, and we were like, no way we're moving to San Francisco. And after some convincing, you guys talked me into moving to San Francisco. My girlfriend came and visited a few times, ultimately worked out.
At that point, it was your fiance.
Yeah, at that point, she was my fiance. Pushed the wedding back until after Combinator. And yeah, so we went to San Francisco. So how was that whole experience for you? How was the YC experience?
personally, it was hard for us to move to San Francisco because we didn't know anyone. We only had us three. We ended up finding a good group of friends there. We had a good community.
But on the inverse, right, that's part of what made it so special, which is that we had no distractions.
Yeah. It was very good for fluid, but there were tough moments, but all in all, I think it was very beneficial. We really got to work for the first time ever. We got to...
It means full time. We've been working.
Yeah, no, but I mean together.
Yeah, full time, the three of us. Yeah.
Oh, let's talk about, okay, so we were at the retreat. YC does this retreat at the start of the batch, and we went, and we were pretty excited about what we were building. We're in YC, we were running all these cool ideas, and we were chosen, and then we had like a call with a hedge fund. And you want to say that? You want to say that?
Yeah.
So at this point, we were really getting good feedback. Yeah. We weren't speaking to anyone who would give us bad feedback.
Yeah. At this point, we were only talking to friends and family, which is a dumb idea if you want honest feedback. And we were talking to everyone in the startup world at YC, and everyone thought our idea was great. So obviously that kept on encouraging us. And then Ben actually had a call with a family friend of his who works at a hedge fund. It was pretty senior guy. And he basically said, nobody will want this. How could you ever think of this? This is the dumbest idea I've ever heard. And he could not have made us more deflating, especially because, again, when you have lots of customer calls, like you should, right? Having a call like that is not the end of the world.
It's normal.
Because, yeah, it's expected that if you have 100 calls, a few will be like that. But what's not expected is when you've only had like 5 calls, that one of them is like that. And then we had a second one like that, and now it's like 30% of all the feedback we had was negative. Meanwhile, everyone in YC keeps talking about talking to customers, getting feedback, building something people actually want, and we're like, oh my gosh, like what have we done?
we were pretty depressed for like 2 days. Like we were so happy. We're at the retreat. We were
on top of the world.
We get on the train back, or I think we went on a bus back, and yeah, it was pretty deflating. But we quickly shifted from, okay.
Yeah, I finally knew what it's like in my life to feel like Tom Brady. And
okay. We get back and we're like, okay, like what do we do? And I think we stuck with this idea for like another week. And then we were like, okay.
We have to talk to customers.
We got to figure out like what we're building.
And that's frustrating because we had just about figured out all of the legal kinks that would have to go into actually getting this live.
This complex framework that we
invented a new type of basically a new type of financial structure, and we had made it so overly complex. And as soon as we started talking to our customers, we realized that none of their mandates would let them invest in something so complex and so unknown. And so we had to go back to the drawing board. So we started going to meet as many hedge fund managers as we could, as many people in the trading world as we could. And it was only when we were speaking with a hedge fund specifically, and it was a couple hedge funds actually, who suggested all in a short frame of time, like what if you just do this as a futures contract?
Mm-hmm. And at this point, we were not even thinking of a futures contract.
Yeah, we had no idea. And so I was like, what's that gonna look like? They had no idea what it was gonna look like. But a few more people kept on telling us this, and each one kept on being like, well, we can invest in futures. And if you structure this like a futures contract instead of a Reg A offering, for those of you who know, that's what places like Masterworks, by the way, sponsor of this video link, I'm kidding. But that's what Masterworks and Otis are, but that's the type of offering they are. And so we were trying to use that type of offering, whereas if we're making an institutional product, we need an institutional offering. And so we started speaking with a lot of hedge funds and ultimately realized if we were going to try and make markets with segments of publicly traded companies, we were gonna fail.
Yeah.
And nobody wanted that. Not nobody, but it just turned out that such a small, it's really hard to...
It wasn't the thing that was wanted. It was something that was interesting, and I guess if there's liquidity at some point...
They would have looked at it.
They would look at it, but it's not what you start out with, and we quickly realized that.
Yeah, because it turns out, again, if you're looking at investing in YouTube but not Google, only a subset of the people who care about YouTube or who care about Google are going to care about YouTube. Yeah. And you need liquidity there, and outside of the top 10 mega cap stocks, right? That's a really, really hard bar to pass. All right, so we went and got dinner with a guy who used to work at one of the biggest hedge funds in the world today. And we were talking about what we were building, and he was like, wait a second, if you can offer futures contracts that give you exposure to a specific part of a public company, why don't you just give us exposure to the metrics of a public company that we actually care about? And that's when it hit us that the metrics investors care about, they actually do want exposure to. It's just, those aren't segments. Those were things like revenue, things like EPS, things like subscriber growth, right? Margins, exactly. Every company has the key KPIs that impact trading on that stock the most. And you have this big problem nowadays where you can be an investor, you can be a trader, and you can place a position because of a thesis you have on a stock, and you can be right, and you can still lose money because an infinite number of factors actually influence the stock price. We actually had one person tell us, like, here's how their investment meetings go. And this is a $5+ billion fund. He said their investment meetings go like this. They ask their analysts, what do you think is gonna happen to revenue? They're like, I think it's gonna be beat or miss or whatever the prediction is. And then they say, what do you think is gonna happen to COGS, cost of goods sold? And then they go down the income statement, and then they say, what do you think is gonna happen to net income or EPS? And they have a prediction. And then they're like, so what do you think is going to happen to the stock price? And they're like, we have no idea. And that's when we realized, or that's one of the many aha moments where we realized, listen, we can actually offer futures contracts, not just on segments of public companies, but on every key KPI that investors actually care about for these public companies. So we can guarantee that if you're correct, you will make money. That if your thesis on revenue is correct, you can make money every time.
You don't have to worry about external risk, market risk, etc.
Exactly. If you listen to this story, what you'll realize is that the initial idea of a retail app to invest in YouTube but not Google is somewhat similar, but not at all identical to what we're actually working on that actually has market demand, but it's the result of just listening to what people have told you. And if I had to pinpoint the two biggest lessons from Y Combinator, one of them is just giving us the internal confidence and belief to go full speed ahead and not have any backup plans and put our whole life into this. So that's number one. But number two was realizing that we don't have to have all the answers. We can just listen to what people are telling us. You don't have to be a boy genius who just knows what the future is going to hold if you listen to what people want.
Yeah, make something people want.
All right, so then YC happened. We kind of zeroed in on the product we were actually going to build. We had a roadmap to do it, and now we needed to raise some money. So talk about the difference between raising money when you're in YC versus when you're not in YC.
Oh, night and day. I mean, we couldn't raise a dime. We had some angels who believed in us early on, but we really couldn't raise anything. And then once we got into YC, I mean, from the minute it was public that we were in YC, we got a ton of investor interest. We didn't cold outreach. We didn't do any cold outreach. We had meetings all lined up before demo day, ready to raise.
Yeah, we ended up raising a seed round around demo day, and we moved back to New York because it's the financial capital of the world, and here we are. So why don't we...
What do you think of New York versus San Francisco?
Ooh, I don't want to make too many people mad, but...
I just think I'll give some background. We're both Orthodox Jews. There's a bigger Orthodox Jewish community here, which makes it easier for us to live here, as well as, obviously, as Kenny said, being the financial capital of the world. And then also just being close to your customers.
Yeah, I think when it comes down to New York versus San Francisco for startups, it ultimately depends on what kind of thing are you building. So if you're building something like a tech-heavy SaaS startup, right? San Francisco is the place to be. That's where all the people who know how to build that sort of thing are. That's where a lot of your customers are based. But if you're selling to the financial industry, if you're selling into the financial sector, right? There's no place like New York, and
yeah. I mean, we were like traveling in the middle of YC. We were traveling to different conferences.
We were all over the country.
We were in New York during the batch, talking to customers, and then yeah. I mean, it's just much easier for us. But if you're building like a SaaS tool or a dev tool,
there's a canonical YC story about this, which is the Airbnb founders, Brian, Nate, and Joe. When they were in YC. Paul Graham famously asked them, right, where are your customers? And they said, well, they're in New York. And he's like, so what are you doing here? And so every weekend they flew to New York. So that became us. Every weekend we were going somewhere else to meet with more hedge funds. And ultimately, I mean, that's what you have to focus on. You have to be near your customers. You have to listen to your customers. And so in that vein, we have a decent announcement coming up. I'm not going to overhype it and say it's a huge announcement, but stay tuned to future episodes of Metrics and Markets as we'll start talking more about metrics and markets and the huge updates when we're able to legally go live. But right now, what's our short-term, medium-sized update?
Yeah, so in about a month, we're launching a trading competition. You can go right now, sign up for the waitlist, fluidinvesting.com. I'll link to it at the bottom. You can actually go see what we're building, see a sort of a beta version of what's going to be accessible later on. But this gives you the ability to trade on the products that we're launching. We're very excited.
And you can earn real money. You can earn thousands of dollars.
Build up your portfolio, show how correct you are when earnings come out, and how
and
your
you
thesis.
You don't have to pay a penny to enter, and you can win thousands of dollars.
Yeah. So yeah, go sign up, fluidinvesting.com.
And more if you share with your friends.
Yeah.
Hopefully.
What's for next week, Kenny?
With this podcast, we're going to do a mixture of things. Number one, we're going to kind of be taking you through our journey like we are here. But number two, we're going to be talking about the actual markets that people are trading on, how they're performing, insights from the markets that people are seeing, and we'll get a really unique perspective on trading and how metrics are affecting markets.
Maybe we'll even clip a GoPro to Kenny and do a little Justin TV set so we can watch our founder at work.
Yeah. No.